Welcome. This is lesson video number 3 in my 6-part trading lesson series. In this video, I'm going to be covering one of the most important pieces of my trading system, which is regular divergence. So when it comes to using regular divergence the correct way, context is very important. So we're going to talk about what to expect from a divergence depending on the context of where we see a divergence forming. So I'll start out the video kind of covering the basics first, but then later in the video, we'll go over how to combine divergence with what was taught in the first 2 lesson videos on directional bias and sweeps of significant levels, which is where you should start seeing how incredibly effective divergence is when used in combination with those other factors. So make sure, if you haven't already, go watch the first 2 videos because everything's kind of connected. Now, before getting into all the details, I do want to give a shout out to BingX Exchange. They set me up with a limited time exclusive event where new users can gain USDT rewards when signing up for an account using my affiliate link and then completing some basic tasks. BingX is unique because they allow trading of crypto, forex, stocks, commodities, and indices. They do not require KYC, meaning more people can use their services, and they are partnered with TradingView. Make sure that you guys read the notes and terms for the event to make sure you get the rewards and know what to expect. That's all down here with the information specifics to get the rewards. And you can also click this link here off of this page. Now let's get back to the lesson on regular divergence. First, let's talk about what actually is a regular divergence and what is it telling us about the price action. I'm going to be using a basic RSI and MACD indicator down here with default settings to demonstrate this. These are really the only indicators that are needed when it comes to spotting regular divergence. I mean, you can play around with other indicators, but these two go well together, and most other indicators are giving essentially the same information anyway. So if you want to go out and buy an indicator, you can, but these free ones work plenty fine. Now let's take a look at some regular bullish divergence. Then we'll look at some regular bearish divergence in just a sec. So these ones have formed recently. I'm on a 15-minute time frame. I've marked them in here. So what is a regular bullish divergence? Well, it's when price makes a lower low, but at the same time our indicator makes a higher low. So here, price makes lower low, indicator higher low at the same time. So we can look at our MACD, our RSI, and again over here, lower low on the price, higher low on our indicators, and again over here, lower low on price, higher low on our indicators. Now let's take a look at a few examples of regular bearish divergence. What a regular bearish divergence is when we have price making a higher high, but at the same time, our indicators make a lower high. So we have here, as you can see, pretty straightforward, just the very basics, understanding what it actually looks like on the chart and with the indicators. That is a regular bearish divergence. Now, what is this actually telling us? Well, very simply, what this tells us is that price is decelerating. The momentum is slowing down. So if there's a bullish divergence, price is going to the downside, but momentum is shifting. So generally speaking, we can expect a bounce or a reversal depending on the context. If a bearish divergence is forming, then the price is going up, but things are decelerating. So momentum is shifting. We can generally expect a pullback or reversal soon, depending on the context. Now, that's the basics covered. So let's talk about the actual important stuff, context. This is what's going to make or break you when it comes to using divergence correctly to make actual trading decisions. So let's get into it. All right, so some important points to make now with regards to context. Number 1, if the directional bias / trend is up and a bearish divergence is forming, then the only expectation is that price may have a pause, consolidation, or small pullback, but not a major reversal. And if the directional bias is down and a bullish divergence forms, the only expectation is a pause, consolidation, or bounce, but not a major rally. Counter trend divergence is not reliable and should not be used to try picking an exact trend changing top or bottom. This will not work out well over time. Even if you get lucky a couple times, a strong trend doesn't care about divergence. Now, just to drive home the point about not trading counter trend and trying to pick a trend changing top or bottom, let's take a look at a strong uptrend and point out all of the bearish divergence, and just to show how little the market cares about counter trend divergence. So bearish divergence, it's like on starting back here up to here, we form bearish divergence. Price keeps going higher. We at most get somewhat of a pullback or consolidation, just some sideways before the trend to the upside continues. And we look here, we get bearish divergence, more bearish divergence there, more bearish divergence there. We keep pushing higher, more bearish divergence going all the way up. And for some reason, the trend just keeps going up. This is why you don't trade divergence counter trend. Now, if divergence doesn't work and the trend just keeps going, what's the point of divergence? Well, here's how to use it in the right way. Essentially, only use divergence with the main trend by having a multi-time frame approach. For example, if our directional bias on a high time frame, like the daily or weekly, is to the upside, then finding a bullish divergence on, say, the 4-hour time frame or the 1-hour time frame, we can get into the main trend at a discount on a pullback. So divergence should be used to tell us when a pullback is likely coming to an end and that the overall trend is ready to continue its next major move. Now, let's kind of get into examples and also combine divergence with other lessons that I taught. So sweeps on significant levels and directional bias. This combination of divergence forming after a sweep on a significant level and using directional bias is a very killer combo. So what I'll do is actually show examples of trades that I posted in my Discord group, and it's a free group. We'll take a look and just go over some examples where I used divergence, sweep on level with directional bias, and captured some fantastic trending moves. So instead of just going back and looking at all the perfect setups that we could kind of cherry pick, I'll just choose some of the recent ones that I talked about in my group, and including the most recent bottom here on Bitcoin that I was able to nail almost the exact bottom by using this type of strategy. So let's take a look at my Discord group. This is a free group. If you want to join, just message me on Twitter. Now, most recently, the Bitcoin trade, we'll take a look at some of the other ones as well, but we'll start with the Bitcoin setup. Here is the post. So, all right, it's time for me to long now. Bitcoin has taken all relevant levels of interest and has formed bullish divergence. View image for break even stop loss level. So the price at that time was 61,395, which just happened to be almost the exact bottom. So absolutely no drawdown on that one using bullish divergence. So let's just take a look at this setup. This was the entry down here. So as I said, combining different factors. So we have, first of all, directional bias to the upside. So we look at our lower time frame, hourly, and we want to look for sweeps on significant levels, right? So we came down on this pullback. we took out all relevant significant levels on the way down here. And now our bullish divergence comes into play, and let's mark it in. This trade was entered because of all factors aligning perfectly after we took out all of our significant levels with a nice, beautiful bullish divergence here on our MACD and our RSI, with our directional bias being to the upside. And the other factors we can get into more in the next lesson videos, but those three factors alone are actually the most important: directional bias and sweeps of significant levels and regular divergence. Now, let's take a look at some of the other setups. There was a buy zone. Let's see, where was the buy zone on Litecoin? Okay, I think I still have that on my chart here. Let's see. Let's go to Litecoin. Yes, I do. Okay, so the Litecoin setup. Profit target is currently still at 115, hasn't hit it yet. But, here was the setup. So this was the Litecoin setup that I talked about in the Discord group. And so let's go over the different factors involved here, with the star being the bullish divergence, because that's what this lesson video is about. But of course, it's important to combine all our factors. So we came down. We have a directional bias to the upside. Things are trending up, so we want to be a buyer on a pullback. We want to get in to the pullback as good of a price as possible. Came down, we swept significant levels, including some more higher up here. Then we came in with our bullish divergence setup, MACD, RSI, after taking out significant levels. From there, took off to the upside. And so let's take a look at another, just for more examples. We can take a look at XLM. Now, this one also had a similar setup on this pullback, along with Filecoin. We'll take a look at that one next. So as we came to the downside, all relevant levels down to here. And what's our setup at the exact bottom? Here's our MACD, RSI, sweeping our low, getting into an uptrend here. So we want to buy a pullback. So that is the setup on that one. Let's take a look at Filecoin. This one, I believe, was a little bit cleaner on this 4 hour. Yep. So this setup on the 4 hour for Filecoin, got our pullback, took out all our relevant levels, which you can see more clearly on our hourly here, the significant levels. So these lows, it's the final lows. So we had our higher low, our higher high, then our pullback, taking out all significant levels. We get another higher low here, and then now the expectation is we're going to see some upside. And with these setups, so to be clear, you're not going to get it right all the time. We're not going to get a full trend continuation out of here every single time, but that's the goal. And what this allows us to do is, most of the time, if you have a bullish divergence, sweep on a level, directional bias, keeping that in mind, you're going to have, more times than not, an opportunity to get the stop loss to break even. So a significant bounce is what the idea is there. We want to see a large enough bounce to get our stop loss to break even, and then try to capture the next full trending move. Okay, so that's the idea when it comes to these setups. And you may even have to go down to lower time frames depending on the size of the pullback. So obviously there's different degree pullbacks, and we can talk about this for hours, but you're gonna have to do some practice. Okay, so try out different time frames depending on the degree of the pullback, the trend, what you want to do with your trading strategy. You can do. You just need to really practice and start on a demo account, because of course there's a lot of nuance, and I can't just explain everything to you in a short video. It's going to require some experience as well, but I can cover the main points in the basics of what you really essentially need to know and how to practically apply it. So that's what I'm doing. Now, I think that is covering everything. Let's see if I missed any sort of points that I wanted to address. Let's see. Nope, that's it. I just wanted to show some examples combining the factors. That's bullish divergence, bearish divergence. Don't trade counter trend. Look for it with the main trend in mind. That's it. Thank you guys for watching. Have a great day. Don't forget to check out Bing X Exchange. When they have this promo thing going, you can get the free money by signing up, doing different tasks. So they were nice enough to set that up for me. And it benefits not just me, but also the users. So that's it.